The 8%, 9%, 10%, that is for the phantom account, 2 to 3 times the amount some of these other companies do. This should be the highest income. Why aren't you showing me this? Hey there, I am John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about roll-up rates and how they are kind of phantom. They're phantom candy that insurance agents are using to sell you a product. So a lot of times you'll see these annuity sales guys saying, hey, 8% guaranteed growth. And you're thinking, oh, that's what I'm going to walk away with. Sign me up, right? The problem is it's phantom. It's not fake, but it's used differently and they're not really disclosing what it's for. So let me explain how this works. So with an income rider, when you're looking for a lifetime income, guaranteed lifetime income, all that matters is the end, whatever that income is, that's what matters. That's the only thing that matters. And why do I say that? Because you can get an income rider that's paying you 10% compounded every year. And you're like, I'm going to make a ton of money. But the problem is the actual account balance itself is tied to an index growth that might be only averaging 4%. That's your real takeaway. If you wanted to actually surrender the policy and take your money out, that's the only growth you're going to walk away with. The 8%, 9%, 10%, that is for the phantom account. That is for your income benefit value. So when you buy these annuities, you got to ask your advisor, where's my guaranteed income? Just show me the guaranteed illustration where the income is, because you could have this high roll-up rate that brings it all the way up to $800,000, right? But then only give me a 5% withdrawal rate, which means I'm only going to get $40,000 a year. Whereas I buy something else that only gets like a 6% roll-up, 6% growth in that benefit value. And yeah, it's not as high as an $800,000 ending roll-up balance, but it's multiplied by maybe a 7% withdrawal rate, and your income is like 50 grand. That's what's important. But a lot of people, they get super confused and they reach out to me and they're like, hey, John, look what he's showing me. It's like 9.75%. This should be the highest income. Why aren't you showing me this? I'm like, well, because the withdrawal rates are down here. I says, I'll sell it to you. It'll pay me more, but I'll show you. And I've done this many times. Here's what it does. The benefit value grows to this, great benefit value. But see the withdrawal rate that is multiplied against at time of retirement? It's low. And so because of that, your income is lower than this one I'm showing you up here that doesn't have as high of a roll-up rate, maybe doesn't have a bonus, but it has a much higher withdrawal rate, and your total annual lifetime income from the amount that you invested is much higher. And that is what's important. When you're looking for highest lifetime income, highest net income from an annuity contract, it matters less how you got there. You have to focus on the end number, okay? If it's got fees, that doesn't matter in my opinion, because the fees come out of the account value. The account value is going down to zero anyways, okay? You could buy a no-fee product and get half the income. That's fine. Your account balance will last longer and you can have a death benefit last. But most people, when they buy these, they're like, no, I want income. My death benefit comes from my stocks and my house and my other accounts. This is for me and my wife, that's common. That's what me and my wife are doing too. Like we want the income rider for highest income. We don't care how it gets there. We don't care if there's a bonus or not. I care if it's the highest income. And so there's many factors that go into it. I mean, Midland National, they don't even give you a roll-up rate. Nothing. There's no growth at all in your benefit base. If you put 500 grand in there, it'll never change. But they give you these withdrawal rates that are like 15%. And that's like 2 to 3 times the amount some of these other companies do. What I just wanted to kind of hit home here is you have to realize when you buy an income rider, there are 2 accounts. Okay, so you buy it in the indexed annuity, maybe you tie it to the S&P index and they cap it at 5%, okay? So they're giving you capped returns, and if the S&P hits whatever, goes over 5, then you're always gonna get that 5%, great. So your account balance here, your actual cash value will grow, for sure. It'll get market protection and everything, it's great. But you didn't buy it for that. You bought it for, believe it or not, the phantom account. But it's not really a phantom account, it's a real value for income. It's your pension value. It's not something that you can withdraw, but it's something that is used to determine your actual pension income, which is really important. It gives you what you're looking for, which is highest lifetime income. So again, it's always important when you're looking at these, just go to my website, go to johnstevenson.com. go to my annuity calculators and check for yourself. Go to the income rider and put in your information, look at the single, look at the joint. It'll ask for your email. That email is used to send you the quote. I'm not going to call you, okay? I'm not going to spam you either. I never reach out to you because if you want my help, then I just encourage people to book a call. There's a link below this video, or there's a link on my website. There's a booking page there. You can book with me there as well. So I am transparent. I'll show you everything that's available. Some of the annuities might pay me a lot of commission. Some of them might pay me next to nothing. I sell all of them. It really just depends on which one is the best for you. And I really don't know, and you really don't know either until you actually go in and find out for yourself. Do your research, plug in your numbers, your state, everything, and then you'll find out. So if you like the video, if you like the channel, like, subscribe, share. I'm absolutely here to help. And if you just want to research, check out annuities, use my calculators. And if you never want to talk to me, that's fine too. Hope you enjoy the video. Hope you enjoy the surroundings. It's beautiful. You got the creek behind me going all the way down the canyon to Genoa, Nevada. It is just beautiful. Anyways, my advice, only take the amount of money that you need from your portfolio to purchase the lifetime income, the guarantees that you need, and no more. Invest the rest, save the rest, whatever you want to do with it. Let it grow, compound for you. That, in my opinion, is the best way to do it. Use an annuity for income. Use it as a tool. It doesn't need to replace your growth strategies unless you want to protect against market risk. Then yes, there are other annuities for that. So I've got other videos that cover that as well. So anyways, hope you enjoyed the video. I really appreciate you for watching, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.